there's a bit to get through, so I'll skip over some of the technical details, but just as some of the other presenters have said, we're in northeast Mauritania. That image in the background is one of our exploration sites. So we clearly don't have any material, environmental or social concerns out where we are. We do have some logistics issues, but they're overcome by a very high quality project. So if we can move to slide 3, please. Yep. Just a quick snapshot. We do have 2 projects, and I'll really focus on the Tiris uranium project in Mauritania, but we also have a very large polymetallic project in Sweden, which also contains a lot of uranium, but it's much further. It's more greenfields in terms of the development scenario. We raised some money as well, so we will capitalise to get us in through to our final investment decision that we're hoping to achieve in Q1 next year. So next slide, please. So look, the 2 projects that focus on Mauritania. It's a Cow Creek hosted uranium deposits. It's very shallow. Most of the mineralisation's within 5 meters of surface. Uniquely, it's all free dig. It has a very strong beneficiation component to it, which, as Murray said, is very good and reduces your costs. So our beneficiation is very simple. We essentially dig it up, put it through a trommel, and over a set of wet screens, take the -75 micron fraction. So we're ending up with about 13% of the mass and 91% of the uranium, and that'll go to an alkaline leach project, very similar to Langer Heinrich. We're on a FEED study, front-end engineering design study, NPVs of $388 million using $80 a pound uranium price, 36% IRR, rapid payback. So it's a strong project. It's getting better. We just recently completed a drill program, and we've increased the resource by 55%. The FEED study was based on the old resource, and we're currently updating that. So we now can have a contained mineral resource at Tiris of 91 million pounds. So the project, while it currently stands as 2 million pounds per annum over 17 years, will get bigger and gives us a lot of optionality of maybe increasing the scale and the output of the project in the near future. And I will touch on Hagorn here and then skip over at the back of this presentation, but it's basically a very, very large 2.5 billion tonne polymetallic shale project in central Sweden. It makes up of vanadium, sulfate of potash, uranium, and a couple of base metal minerals. We did a scoping study last year which excludes uranium because there's a current uranium mining ban in Sweden. Strong economics depending on the vanadium price essentially, but if we add back in uranium, it uplifts those economics quite significantly, and it does contain circa 800 million pounds of uranium in this resource. It's a very expansive shale system. So it's one that in our back pocket we're not getting a lot of value for it, but it potentially has a very significant amount of value. And what we're doing this year is potentially is putting an application in for an exploitation permit, which is equivalent to a retention license. So over that asset, so we maintain control of that asset. So next slide, please. So Mauritania, just north of Peter's project in Senegal. Mauritania is it's a stable democracy. We just had a presidential election end of last month. The incumbent President Ghazouani was returned for his second term, 5-year term, with a very impressive 56% of the primary vote. Big country, 1 million square kilometres, very underpopulated, just under 5 million people. But it does have a mining history. They've been mining there for 20 years. Kinross with the Tasiast Gold Project, First Quantum, SNIMS, the state-owned iron ore company that produces circa 18 million tonnes a year out of their various projects. BP investing significantly in an offshore gas field in combination with Senegal to the south. So they're very strong on mining. Not a lot of mines, but they're very strong on mining, very supportive. This week we just got our last license to to allow us to develop and produce uranium from Terrace, the prior exploitation permit for developing a uranium mine. So we're now fully licensed to commence operations up there. They've set up an interministerial committee to help us, like a special projects committee to help us on our development pathway. They have while they don't have any uranium mining, they've got a well-established mining legislation through the Department of the ARSN, and they've been member states for the International Atomic Agency since 2004. So they're open to uranium mining. They've got legislation in train, and they're very supportive for us to go forward into uranium mining in Mauritania and develop what will be a long-term uranium province, particularly in the northern part of the country. Next slide, please. Okay, high-level economics. We've sort of talked about some of the economics before. The economics were based on the previous resource, which was circa 60 million pounds. Our recent drill program increased that by 55% to 91 million pounds. So we are updating the mining optimizations, the economics, and looking at the optionality to increase that throughput sometime in the future. So it should be some good numbers coming out around that sometime in the next few months. All-in cost $34.50 a pound. That's just uranium only, and it really is driven by that shallow nature of the mineralization and the beneficiation. So we essentially upgrade the in situ grade, which is about 255 ppm, to 1750 to 2000 ppm. So it's a 6 to 8 times upgrade by just a simple size fraction differentiation using screening and scrubbing. So we've done 150 tests and pilot test work program to demonstrate that, and we've got continue to do test work to demonstrate that. And it's really driven by, it's a calcrete hosted uranium deposit, but it's quite unique in terms of it's quite young, and it got frozen in time when the desertification of the Sahara Desert happened. So our calcretes crystals are sub 10 micron. They loosely bound to the weathered granite particles that host the deposit, and they haven't had the longer time history for the calcrete to fully develop, or the carbonate, the carnatites to crystals to get bigger. So it's quite unique in that respect. As we've said, we're working towards FID late this year or early Q1 next year, and then post that it's 18 months design and construct, and we'd expect to be producing uranium at Terrace in 2026-27. But we think it's a uranium province. There's very little exploration. We've been targeting the radiometric anomalies. We've significantly shown that resources can grow, and they continue to grow. And what we've done is positioned ourselves to have a significant footprint over a new emerging uranium province. And we've got 13,000 square kilometres of tenure under application. They haven't been granted yet, but that covers that northern Mauritanian belt that have a lot of radiometric anomalies that haven't been drilled, and some structural targets as well. So if we can go to the next slide, please. Again, we'll just look. We won't go into the detail too much, other than the project's about $230 million to build, plus some working capital. We've started the funding process on that. Again, it's the funding process is going well, but it is Africa and it is Mauritania, so the pool of investors, particularly structured finance investors, is smaller. The image there is our 3D design of our alkaline leach plant. Because of the beneficiation, the leach plant's only 500,000 tonnes per annum, producing 2 million pounds a year on uranium, but particularly the back end is scaled for 3 million pounds a year, because it's a off-the-shelf ACE plant. So heated leaching, ion exchange, and the biggest portion of this plant is the filter presses, because of the fine nature of the mineralization, or the product that's going to the plant. we have to use filters rather than CCDs or anything else to separate the liquid and solids. Next slide, please. We won't spend a lot of time on this, but this showing you the production profile of the feed study. Again, our strip ratio is very low at 0.7. It's all free dig, and because of the shallow nature of the mineralisation, you've got ultimate flexibility in the mining. We'll have a number of mining units feeding ore to the plant in a slurry, and the mining units will simply be a small fleet with a scrubber, a set of derrick screens, taking the mass down to circa 13% of the mass, 91% of the uranium, and that'll get slurried to the process plant. We can do that portion of the upgrade and mining for $8 a pound. So that really what drives our low costs. Next slide, please. There's more stylized view of the process route. So we've talked about scrubbing, screening, mining, slurry to the process plant. Essentially, it's a leaching, alkaline leach, and it's very similar to Langer-Heinrich's flow sheet. Filtration, ion exchange, and then it goes into an ACE plant, which is a Adelaide control system off the shelf yellowcake precipitation packing unit, and then we'll take the yellowcake via road down to the Port of Nouakchott and ship it up to refiners or converters and refiners. And we've got an agreement with Orano for the seaborne logistics, and the ground transportation will be under international standards. Next slide, please. So let's look at the resource. The blue areas were our previous resource. The red areas are the circa 15,500 meters we did recently. Again, because of the shallow nature of the mineralisation, they're shallow air core holes. Most of them are we drilled a refusal, so most of them are sort of 6 to 7 meters deep. Then use radiometrics to determine the in situ grades. 55% increase from the previous drill program, but you can see the underlying images of the radiometrics. There's still a lot of active radiometric signals that haven't been drilled. We've only really focused our drilling on our 2 licensed exploitation permits and our exploration license, Hippolyte South. But as we've said, we've put 13,000 square kilometres of new tenure, and you can see on the top left-hand side of that slide, there's some fairly significant radiometric anomalies that underlie some of our applications, which are more than likely to generate more resource growth in the future. So while we're sitting at 91 million pounds, we think this is a proper uranium province, underexplored, and we could easily see multiple new discoveries in this area. And to a couple hundred kilometres to the west is Churus West, that contains, I think, about 12 or 13 million pounds of uranium, and again, underexplored. So look, we think we're sitting on an emerging uranium province. We've got enough to start a very successful mining operation, and we've got the support of the government to do so. And that's what we'll be focusing on the next couple of years. But optionality in terms of finding new uranium, I think we're very well positioned. And we've delivered this uranium at 20 cents a pound, but that includes all our study costs to date. So everything we've spent in the country on the project has only cost us 20 cents a pound to get us to this point, which is funding ready and development ready. Next slide, please. So what's news flow? And again, the image there, you can see the nice yellow carnotite. It's very visual, which will help in the mining. So we've received all our licenses. We're growing our team. We've got new CFO. We've appointed an owners team. The market's pretty tight for project development managers, so we've identified a small boutique group, Project EQ, run by Jan. He comes with a team of 5 engineers. They specialise in owners team activity. So they've hit the ground running. They're getting us ready for pre-final investment decisions. So all the contracting strategy, all the engagement with the subcontractors, and then they'll take us through to development. So we're ready to develop the project. New CFO with lots of West African experience. I've got a country manager. We'll start in November, and we're waiting to make an announcement around him once he's completed his current position. But he's a very high quality Mauritanian individual, and will go a long way to support our efforts in the country, increase the resources, as I said. But in terms of recent future news flow, we're updating the mining schedule and economics on the bigger resource. So we would see that 17 years at 2 million pounds significantly increasing. We're looking at options for expanding the production in the future, maybe not up front, but maybe after a couple of years after we've got cash flow to support some additional capital. But the plant's scalable, the resources is very open and very flexible, given it's shallow. So we fully expect to see some very strong and real options for going well beyond the 2 million pounds per annum production rate. We're well advanced in terms of offtakes, and some of the offtake strategy will be driven by the funding requirements. But we have an existing offtake with a trading company, Curzon. We recently came to a renegotiation on that, and that's circa 150,000 pounds a year over 7 years at $74 a pound, and with another 150,000 pounds at spot minus 4%. We're very close to signing up a committed offtake with one of the major US utilities as well. So we've got a expert uranium trading guy who's used to work for Rio Tinto doing their uranium marketing. We've had a long engagement. It does take a long time to engage with these utilities, and we're in the position where we're getting more real. We're nearly FID, but we are a greenfields project in a greenfields country. So you've got to get over that hurdle with the utilities, but we're getting very close and being asked to tender on a new number of contracts they're putting out in the market. Our debt funding process has commenced. We've engaged Aramco, they're a specialist debt advisory group in Africa. We've done a number of projects in Africa, including West African Resources Sanbrado project in Burkina Faso, and they're doing some other uranium stuff, so they've got expertise. We're also looking at strategic investment process with Macquarie Bank, and obviously the equity. So we've got to pull together all the funding options. And as James said, funding uranium projects is a challenge, but it can be done. I think we're, on the back of a good project. I think we will be able to deliver that. So what we're doing is pulling it all together later in the year, so we then know what the best optimal funding mix is for our shareholders. Where we are in the desert, waters are important. Not a problem, it's important. We have a small water resource around the project, but it's a confined aquifer with limited recharge. 100 kilometers to the south is a massive basin, to Adeni Basin, that we're starting to drill on a number of targets we've got down there. But that basin delivers significant water to the iron ore mines, and it's sort of in the area, a couple hundred k's away. But we're confident that we'll deliver the water from that source. ESG is important. It's particularly important in a developing country, and particularly important when you're dealing with radiation. So we're updating our ESG framework and procedures and policies. And while we had an exploitation permit approved about 4 years ago, so we're updating environmental management plans and social engagement plans and radiation safety plans. So we intend to deliver this project with first world standards, and for the long term, and other pre-FID work. So really it's all driven towards getting to our final investment decision later this year, early next year, and then getting the project into production. Next slide, please. Sorry, we've got the next slide, or we're frozen. Oh, so look, I won't dwell on this too much, but Hagorn is a massive resource. Sweden are in the process of lifting the uranium mining ban. They called an inquiry to investigate the process to lift the ban. The current coalition government is very supportive and wants to facilitate the mining industry more than the governments have in the past. So we expect that the legislation to lift the uranium mining ban to be introduced for discussion in Parliament by the end of this summer. That's what the politicians are telling us, and they'll take that to a vote early next year and January next year. So we expect that uranium mining ban to be lifted in country. They're also looking at other ways to improve the approvals process in Sweden for mining. But if we include uranium into the project, then it certainly uplifts the NPV by circa 37% using $65 a pound. So it will deliver a much more robust project if we can access all the commodities in the mineral suite in that shale. But you know, it's a project should have significant value sometime in the future as we secure the licensing, as Sweden lifts the uranium mining ban, and we progress through the studies and understanding of that project. Maybe 2 slides forward, please. Next one. So essentially, in summary, you know, we like the uranium thematics. Everything James said, we 100% agree. There's supply constraints. There's good support for the uranium price, and we think we're well leveraged to deliver into that. You know, the main focus and the main near-term activities are building a uranium mine in Mauritania with Tiris, strong economics, good growth through resources, and improved scale of the project. We're fully licensed, you know, and we're very, very close to starting the development of that project. And you know, if you put you add Hagorn onto the mix, you know, we have a very, very large uranium mineral resource inventory of 891 million pounds. You know, I think as we see, you know, continued support for the nuclear power industry and the uranium price, then we're well positioned to leverage off that, both through production and through future production from Hagorn. So I think that's the conclusion. I think the last slide is our oh, sorry, the next slide. I had one more slide, sorry, after that. And that's just a view of our tenement applications through northern Mauritania. You can see the green tenements are our existing tenements. So we've got about 30 times the tenure we've under application we've already got. And we've already got 91 million pounds with some pretty strong growth within those existing tenements. But you know, a lot of those tenements targeting actual radiometric anomalies, plus some structural targets to the south on that unconformity contact that hasn't had any uranium exploration, and in fact that's where the water drilling will be. So that's my presentation. Thank you. I'll take questions.
Perfect. Thanks, Andrew. Great presentation. Clearly all in uranium, and similar to, I suppose, Murray and others have really had to hold the line, if you like, during a tough uranium market. How hard was that?
Wasn't that hard for me because I joined in January. But look, the company, you know, the company has been focused on mainly on uranium through most of that time, and it's been pretty tough. You know, they've got recapitalized a couple of times. We were recapitalized about 2.5 years ago, because you know the market wasn't supportive of uranium at $15 to $30 a pound, and nobody did any work, and the investors weren't giving you money for that. But the company really had a lot of perseverance and saw the value of these 2 assets that they had, and they did manage to get through. But you know, I think it hurt. Well, hurt shareholders through the way. You know, the last recapitalisation, shareholders are well in the money. But yeah, look, it's been a tough journey for them.
As you say, good point here. You came in January. What attracted you to the company?
Look, I just finished up a gold project in Mauritania, in Senegal, where Peter is, and you know, I really liked. I'm a geologist, like technical, worked for Macquarie Bank for a long time doing mining finance, so I really like the projects. You know, assets are the hard things to find. You can deal with jurisdictions and things, but you've got to find the projects. And this project stood out to me as, you know, a real low cost project with lots of flexibility, and you know, spent a lot of time on a DD on the beneficiation particularly. And they've done a significant amount of test work to prove that it's valid and repeatable and consistent. And the exploration potential is significant. So, you know, I really like the idea that we can develop a proper uranium project and then have the optionality to make it bigger and actually find more and more discoveries. So, you know, a lot of it should position itself once we've proven that it's a good jurisdiction to do business and you can produce uranium from it, that, you know, we've got likelihood we can deliver 2 or 3 more discoveries similar to this.
You mentioned in your presentation the fact you're nearing final investment decision, financing, all of those sort of things. Have you noticed the change in the off-takers, the financiers in recent times? Obviously, you came in January, but you've got a strong history in project finance. Have you really noticed the difference in tone, or has that group were already in that mode of needing and wanting to support projects like this, and it was really that the market was catching up, or has there been a sentiment change at that end as well?
Well, look, I think look, when you go to Africa, in terms of debt funding, particularly, there's only a small pool of banks that play with that level of country risk. It doesn't matter which country you are in West Africa. But what I've noticed is a lot of those financiers who are comfortable with Africa as a jurisdiction, that they're more comfortable with uranium. Some of them are changing their existing bans on funding uranium, but it's helped by the price. You know, it's a strong project, strong economics because of the price, and we can now we can give some certainty on price to the financiers with a number of offtakes which have collars or floors or fixed pricing from tier 1 counterparties, being the utilities. That gives the banks a lot of comfort in terms of revenue certainty, which they worry about a lot in terms of pricing and getting their money back in the early part of the project.
A great project, clearly some big milestones ahead. A greenfields uranium jurisdiction, but a well-known mining and exploration jurisdiction for commodities outside of uranium. So we look forward to following the country with interest. Andrew, thanks for your time.